Hello everyone, this is Debra Richardson, and today I am putting the AP in Happy where accounts payable teams are empowered to protect the vendor master file from fraud. This podcast will give a voice to accounts payable team members by talking about the growing reality of cyber attacks in their world and which vendor setup and vendor management techniques they can apply to protect the vendor master file from fraud. Need training? Visit the Vendor Process Training Center to enroll in your choice of weekly live and on-demand training sessions. Plus, get access to vendor setup form templates and reference tools that will help you and your team to reduce the potential for fraud, compliance fines, and just overall bad vendor data. So sign up for a free account to get access to free training sessions, vendor process FAQs, and a resource library with information you need to manage your vendor master file. Visit training.debrarrichardson.com today. The link will be in the show notes. Nacha rules just keep coming. If you are involved in the vendor process, there are 2 Nacha rules with a compliance deadline of March 20th, 2026. So if you haven't heard of them yet or have and are not quite sure what they are, here is where you can go to get more information. Keep listening. Welcome to episode 376, March 2026 deadline, Nacha rules impacting vendor payments. And stay on to the end and I'll talk about a free webinar that I will be having that might help you out to immediately comply with the Nacha rule that is completely under your control. Now, most of you probably have already heard of Nacha and you know what they do, but just in case, I do want to just go through what Nacha says or how they define their role in the ACH network. And when I talk ACH, I'm talking all types of direct deposits, right? ACHs, those are they're direct deposits and direct payments. And so those are, right, your payroll payments, those are your vendor payments. And for the audience that, listens to my podcast, we have or you have those vendor payments. So Nacha, if you go to their page, and I'll put a link to it in the show notes, on their About Us page, they say that Nacha governs the thriving ACH network, the payment system that drives safe, smart, and fast direct deposits and direct payments with the capability to reach all U.S. bank and credit union accounts. So again, that includes payroll payments, and for all the vendor team members that are listening to this podcast, that also means your vendor payments as well. So this is not the first time that Nacha rules affected the vendor payments. There were a couple in the past that did. One was back in, and I did a podcast on it back in August of 2022. It was episode 198. And it was called a data security requirement for the vendor bank account number. And yes, learn more from Nacha's Amy Morris. And that was a very long title, but I had someone from Nacha come on and talk about the new rule about making sure that you secure your vendor's banking when it's under your control, either when it's on invoices, right? How you store the invoices, or whether it's stored in your vendor master file, making sure that it's encrypted at rest and in transit. And so that rule was effective back in 2022. I think it was in September of 2022. But then there were a couple of other rules as well related to micro entries. And micro entries are those penny tests, right, that you uh, use if you use them. That you will send a reduced amount, an amount under $1, right, to verify that the vendor's bank account is the actual vendor's bank account. And so there were a couple of steps to that rule. I know one of them was that you had to make sure that you put in the description count verify. And then the second part of that is you had to have some type of a fraud monitoring in place so that you can detect if you had, more fraud than normal with that, average number of um, micro entries that you were verifying. And so we've seen rules in the past that the vendor team definitely needed to be a part of and needed to comply with. And these next two that are coming up, March 2026, are no different. So let's talk about those. And for each of those, I am going to put a link in the show notes to the actual rule on the Nacha website so you can get more information if needed, because by the time you're listening to this, you have less than a month to comply. All right, so let's talk about the first one, and this is company entry description. So this is kind of like what I just talked about with the micro entries. And so if you are doing, or if you are doing those penny tests, or were doing them back when the rules came out, I think it was 2022 and 2023, because it was a phase one and phase two. But you already went through this with the description, because you had to include in the company description in that file that you sent to the bank, count verify. And I think it was abbreviated to ACCT and then verify, all one word capitalized. Well, they're doing the same thing with uh, a description that you would think would only involve payroll, because when you look at the actual Nacha rule on the Nacha page, they talk about payroll. And you have to enter in the standard company entry description, all capital letters, the word payroll. And this is it's supposed to be for all payroll payments. And okay, there's another one too that goes with it that I don't think affects the vendor team at all, but it'll be on the same page. You can review it to see if you think it affects your team or not. But it relates to e-commerce purchases, and so if there is a debit entry that's authorized by a consumer on your website, if they're buying something from you, when that web debit goes through, it has to have the description or the word purchase right in the description field. But I don't know that would affect any of the vendor team members. But if you think it might, make sure you review that when you click the link to get to that page. But where you might not think it involves you is the payroll company entry description. Because if you scroll down and you review the frequently asked questions, that section, the second question is, does this requirement also apply to originators with contract, and then in parentheses it has 1099 employees? And the answer that is on the page is yes. This requirement applies to originators of all types of compensation payments, regardless of the status of the employee or employment relationship. So whether they are an employee or a contract employee or other, I'm not quite sure what other means, but if you have a vendor that you are paying for, like professional services, and to me, that seems like those would be payments that would be reported on a 1099 NEC if they were reportable. Then that means that in the company entry description, you have to have payroll in that field. Now, what I would do if I were you, you still have some time, depending on when you're listening to this, but I would make sure whether you speak with your tax professional or speak with your leadership and just verify that that is what you should be doing and for which vendors and which types of payments. Now, probably just like what you did with the micro entries, company entry description of account verify, if you have micro entries or had them back then, you probably need to work with your system team or IT team to determine how best to make sure that that field is populated when it is necessary. All right, so that was the first one. So now let's go to the second one. And this second one is all about, actually, it comes in two parts again, and it is all about making sure that you have processes in place to identify fraudulent transactions. And so, actually, both of these rules fall under what they consider risk management topics. And so, to reduce the or attempt to reduce the amount of fraud that's flowing through the ACH network, there are rules being put in place either with your bank, the ODFI, the vendor's bank, the RDFI, also with third party providers, and now, right, with originators that are corporations like your company, and so these types of things are put in place to prevent fraud. And so this one is specifically to make sure that the ACHs that you are originated, that at some point you have a process in place to make sure that it's not a fraudulent ACH uh, payment that's going to go through the network. And so they don't necessarily tell you what it needs to be. And actually, in most of these, most of the rules, they don't tell you, give you specific requirements as to what you must do, how you have to satisfy it. But what it does say, and this is on the page that I am going to link in the show notes, is this rule will require all ODFI, so that's your bank, and each non consumer originator, which is your organization, also third party service provider and third party sender with annual ACH origination volume in 2023 of 6 million or greater, to establish and implement risk based processes and procedures reasonably intended to identify ACH entries initiated due to fraud. And so you have to have some type of a process in place. Again, they don't tell you how to satisfy it, which means you could do anything from, making sure that you have that confirmation call in place, or that maybe you are performing bank account ownership validation. And the goal here, right, is to reduce the incidence of successful fraud attempts. Because if you think about it, if no one does anything, right, when you know that there could be some fraudulent transactions, and if you don't have any processes in place to try to identify and stop it before you send that ACH payment in the bank file to the bank, that means that when you find out there's a fraud, now, right, you've got to have extra rework or extra work, I should say, not only your company in identifying, right, that it's a fraudulent payment. Now you've got some things that you need to do, and now you've got the banks that have things that they need to do to try to recover the funds, and maybe other organizations as well, where if you have a process in place that could have stopped it in the first place, now no one has to do that extra legwork. And so, and that fraud maybe could have been prevented. So the thing about it is too, is that not only do you need to have a process in place, but you actually have to prove that, right, you've got that process in place and that it's being done. And so you need to have some documented processes. And I recommend that you also have like an audit in place to make sure that the folks are following that documented process. Now, the good news is that one of the questions in the frequently asked questions section says, do the rules require ODFIs, non-consumer originators, third-party senders, and third-party service providers to screen every ACH entry individually? And that answer is no, because by the time they get to the point where you're creating the ACH entry, that process should have already been done. And so, another thing too that they indicate here is that you have to have some type of a risk assessment performed as well. And so, with that risk assessment, though, they do tell you that you cannot use that risk assessment to say that, you know what, we really don't have any risk and we really don't need to do anything. So, just to be clear, everyone has to do something. Now, the 6 million transactions, and that is all of your ACH transactions. And remember, it includes payroll and vendor payments. So if you have, you can't just look at your vendor payments, you also have to look at your payroll as well. So all of 2023, if your ACH payments, the volume was over 6 million transactions, you have to comply by March 20th, 26. But if it's less than that, then you have until June. And they say they give a date here of June 19th, 2026, but that is a Friday. And so I've seen other places where the date that Nacha gives is that Monday, June 22nd. All right, so those are the two NACHA rules that you may have to comply with by March 20th, 26. The only one that you may have until June 19th or June 22nd is the fraud monitoring rule if you had less than 6 million transactions in 2023. But remember, that includes payroll and vendor payments. So what I'm going to do is I'm going to put again the links to these two NACHA rules I talked about, but I'm also going to put a link to a webinar that I am having with Vendor Info on March 12th. So it is a week prior to when these rules are due. And I will talk about two manual processes that you can use that you can put into place. One, you can put into place immediately. So if you haven't done anything, you could at least do that. And then Vendor Info is going to talk about their automated process with bank account ownership validations. And actually, that is a fairly quick solution to implement as well. So I'll put a link to that webinar in the show notes as well. Right. So thanks, everyone. I hope you enjoyed the 376th episode of the Putting the AP in Happy podcast, where accounts payable teams are empowered to protect the vendor master file from fraud. Don't forget to check the show notes for the links mentioned in the podcast. And if you enjoyed this episode, consider subscribing and writing a review of my podcast on the platform that you use to listen. Stay happy.